the price needs to be revalued according to the Dutch National Bank. If every one of these countries has been buying gold and accumulating it on their balance sheet, valued at $35 an ounce, mind you, in all of these central bank balance sheets, I think, yes, the price of gold would have to be either revalued, or you would have to expand the gold market. But by seeing all of these countries bring their gold back and accumulate it in the levels that they are, I think it's massively bullish for gold. And when we talk about, to your point, the Treasury reserve capacity, look, the Treasury can be weaponized. Who the hell wants to hold treasuries anymore that are weaponized? And when you look at gold, it's outperformed the Treasury market for 50 years. Just now, doubled the performance over the last 25 years without the risk, without the geopolitical risk, the confiscatory risk, the sanction risk. So yeah, I do think it will be incredibly bullish for gold. And I also think if you read that white paper, they talk a little bit about the fact that what will start out as a common settlement currency, this unit, will turn into something valued more than just the gold value. It will have a supply-demand fundamental. And if all of a sudden we move to a system that inspires trust, rather than one where they have to rely upon a government that is broke, insolvent, and going around the world, imposing their will in what is viewed as a hypocritical position, yeah, the demand for the unit could explode, and it could become, as the paper describes, a unit of settlement that actually becomes worth more than the underlying assets based upon supply and demand. But to your point, yeah, the gold market will expand and will be revalued, or a combination of the both.
Central banks worldwide are secretly amassing gold far beyond their official claims, raising questions about their true reserves. For instance, China reports holding 2,600 metric tons, but experts like Andy Schectman suggest the real figure could be over 38,000 metric tons. This covert accumulation, facilitated by state-owned proxy banks and unreported transactions with refineries in South Africa and Switzerland, is setting the stage for a potential massive revaluation of gold. The implications are profound, potentially reshaping everything we know about currency stability and investment strategies. Why would these nations hide their true gold reserves? Simply put, secrecy allows them to manipulate gold prices, making future acquisitions cheaper. As Schectman and other experts point out, this hidden stockpiling could lead to a dramatic increase in gold's market value, shifting global power dynamics and economic strategies. If the true extent of these reserves is revealed, it could drastically alter the financial landscape, making gold a key player in international finance. Imagine the impact on your investments and the broader economic environment when these reserves come to light, potentially triggering a revaluation that could double or even triple gold prices.
Why would it be in the vested interest of a country like China to tell us the truth? They tell us they only have about 2,600 metric tons of gold, yet since 2000 at least, they've been producing anywhere between 400 and 500 metric tons a year. Even call it 200 metric tons a year. The numbers would be extraordinarily higher than what they are. And my entire career, Chris, everyone would always say that the Chinese are very much not forthright with how much gold they accumulate. In fact, their numbers would stay around 1,200 metric tons forever, and they would never update them. And I think it would be in their vested interest to keep that close to the vest. And I think it's phooey. Aside from that, much of the gold could be accumulated by their state-owned proxy banks that would then, at the behest of the PBOC, accumulate metal, not be forthright about it, not report it to the IMF, deal directly with the refineries in South Africa and Switzerland, not report that to the IMF. Why would they? And if they realize that just by lip service, just by saying that, they can knock the price down and subsidize their future purchases, it would be in their vested interest. And if someday, as the head of the Dutch National Bank talks about, we see a gold revaluation, oh, look at how much gold we actually have. And here it is, come and audit it. And now it's revalued to a much higher level. So just like it doesn't do any good to talk about the trades that these institutions are making to crowd themselves out, as people are gobbling up information at the speed of sound, Why would they want to tell us that this is our primary objective, to accumulate all the gold? So no, I don't believe it. I think it's nothing but conjecture. I don't care who's saying it. I think it's propaganda. I don't think they've stopped buying gold. In fact, they're probably increasing it, just not running it through state channels that report it to the IMF. I have no proof of that, but that's my feeling. And, Alistair McLeod, coincidentally, will tell you that he believes that China has 38,000 metric tons, very similar to what you're saying. And to your point, he believes that 18,000 perhaps is in the hands of the people, 20 in the hands of the state. Whatever it is, I'll just simply say the numbers are, in my mind, are way understated, and it wouldn't behoove them or any other sovereign nation, including the United States, to be forthright about how much they have. I think the long end of the bond market ultimately marches higher. And when you're talking about 25 basis point rate cuts, while the effect is not really substantial, I think the perception is. And that the perception is that the Fed will never normalize their balance sheet, that they will choose austerity well after they do inflation, that inflation will be the way that they try and get their way out of this mess of $1 trillion in debt every 100 days. You can add more to that now. That's $100,000 a second. You can add more to that now if they lower rates, and it just will reignite the inflation engine, by which we're lied to as to what those levels truly are anyway. So it's just a game, and it doesn't mean a whole lot. If they really want to do something about it, fine, drop rates 100 basis points, not 25. Do it all at once. But they're not going to do that. This is all politicized and nonsense, and in the end, won't do anything but continue to diminish our reputation on the world stage, in my opinion. Those systemic banks that are massively over-leveraged, that carry, trillions and trillions of dollars worth of derivatives amongst them, and move to the regional banks. And now we see that the regional banks are the ones that are upside down in terms of their over leverage and their undercapitalization, with the reserve ratio down to zero. That they were the banks that got blown up. Those are the banks that are not too big to fail. Those are the banks that hold the majority of the commercial real estate and the small business loans. Those are the banks that are in trouble. And as everyone has been chasing yield, moving into money markets and short-term treasuries, they've gone back into the big banks. And if indeed that were the case, where we see one of these big banks fail, as a result, it ignites a fuse of panic that this country has never seen. I hope it doesn't happen, but yeah, all of these banks are really, when you look at it, not in a good position to weather a massive uptick in interest rates. I can understand why they want to lower rates, but yeah, when you look at the balance sheets of these banks, they're not good, and even though they're too big to fail, they're very, very precarious. And it's not only their balance sheet, it's the derivative exposure that they had. That's why we had to bail out AIG way back when, because AIG issued the reinsurance, the credit default swaps against these banks. It's if one bank fails, what happens to the rest? This is exactly why UBS had to buy Credit Suisse. Evidently, it was too systemic. What happens when one fails, who has deals with 12 others, and starts to bring everyone down? This is the chain reaction that I think would be very, very concerning and very frightening. Quite frankly, I'm surprised to hear them say that they indeed did fail the stress test. I would think they would keep that quiet more than anything. But it's an indictment of the system. This is why you're hearing them talk of lowering interest rates, albeit only 25 basis points is what they're expecting. I guess that's what you have to do in a system that is as sick as this is. Yeah, it is. I mean, and that's even what Putin said in his speech in St. Petersburg recently, that Bretton Woods system is dead and the dollar is backed by nothing but the perceived confidence and faith in the dollar. You talk about faith and credit of the U.S. system. The credit is upside down. We're nearly 130% debt to GDP. We're very much indebted, nearly 200 trillion in debt. And when you talk about the faith, what faith do you have in a system that weaponizes and outright steals Russian assets? And so when you talk about faith, I don't know what faith there is in the system, and that's what he's getting at. That's a scary thing. And that's why I think we're seeing all of these central banks accumulate gold. And that fabulous interview that you did a few weeks ago and really opened my eyes to, I had known a lot about Enbridge, but not a lot about the unit. And I've dug deep into it. And I believe indeed this is the reason why all of these countries are accumulating gold and repatriating it, because it will be part of a new system. It will be pegged to a new system, which will eliminate the need for faith. And you know, you only get one chance. When you ruin credibility and trust and faith, it's almost impossible to put back together. It's like smashing a glass against the wall. How do you put it back together? I don't know that we can. So I think that is true. It is about the faith, and faith that arguably has been squandered. And there's been almost 30 banks that have brought their gold back from the New York Fed and the Bank of England recently. The biggest being, of course, India, who bought 1.5 times the amount of gold in 2024. They bought 1.5 times the amount of gold in the first 4 months of this year than they did all of last year, and repatriated it along with 100 metric tons held at the Bank of England. And you mentioned Saudi Arabia and Egypt and all of these African countries repatriating from the New York Fed, which gives access to COMEX, and the Bank of England, which gives access to the LBMA. They don't care that they have access to these hubs of easy trading. They would rather remove the counterparty risk and bring it home. I think that's a great point. As someone who shipped silver and gold around the world, I would be shocked if $4 is what it would cost to ship each ounce. I mean, from here to Canada, it's a whole different story, but you're still going by air most of the time. It's a lot less than that. So I guess we'll have to see ultimately, but I would think that 4 would still be enticing. Move it up to 8, 9, 10, 12, and all of a sudden there won't be an ounce left that isn't nailed down to the floor in any of the Western vaults. The price needs to be revalued according to the Dutch National Bank. If every one of these countries has been buying gold and accumulating it on their balance sheet, valued at $35 an ounce, mind you, in all of these central bank balance sheets, I think, yes, the price of gold would have to be either revalued, or you would have to expand the gold market. But by seeing all of these countries bring their gold back and accumulate it in the levels that they are, I think it's massively bullish for gold. And when we talk about, to your point, the treasury reserve capacity, look, the treasury can be weaponized. Who the hell wants to hold treasuries anymore that are weaponized? And when you look at gold, it's outperformed the treasury market for 50 years. Just now, doubled the performance over the last 25 years without the risk, without the geopolitical risk, the confiscatory risk, the sanction risk. So yeah, I do think it will be incredibly bullish for gold. And I also think if you read that white paper, they talk a little bit about the fact that what will start out as a common settlement currency, this unit, will turn into something valued more than just the gold value. It will have a supply-demand fundamental. And if all of a sudden we move to a system that inspires trust, rather than one where they have to rely upon a government that is broke, insolvent, and going around the world and imposing their will in what is viewed as a hypocritical position, yeah, the demand for the unit could explode, and it could become, as the paper describes, a unit of settlement that actually becomes worth more than the underlying assets based upon supply and demand. But to your point, yeah, the gold market will expand, and will be revalued, or a combination of the both.